Well, today is Sunday, the 25th of March, 2012. This will be a technical analysis using both silver and gold as the instruments to be tracking. And welcome to today's video. Last week, I talked about this 30 level, how it was looking to make a move towards it. Nothing has changed over the past 5 trading days. Still showing us the same sort of setups. If it does not make it to 30, then this would look to be that of a failed breakdown before it goes higher, but the odds would probably state that it's going to continue its downtrend again. Whether it has enough room to make a lower high from this $37 low is very difficult to state within this time on any rallies. These a Fibonacci retracement that will be very important would be this high. This high is 37.48 or 37.5, and then this low, which currently is in at about 31. So just quickly doing up these numbers, if we have 37.5 divided by 31, and we'll put this up to the 61.8% Fibonacci retracement percentage, multiplied in again by 31, that's a little under 35. So if we have any rallies, if it is unable to really get above this line in here, then that would still tell us that the selling is still legit, because it's still below the 61.8. But again, this rally is still legit because it's still above this significant $30 mark. Let's move this on to the weekly chart. And the 33.5 level is big, so is a 26 and change, because it has held and stayed above this level. That means the rally that has gotten us there, the 8-month duration, where the market pretty much tripled from the 2010 lows of under $18 an ounce, is still intact. It's still in play, but the correctionary phase does have a downtrend. And when you look at this within a logarithmic chart, you will get a perfect hit of these different tops. You connect the same rate of ascent descent, which is obviously descent, with the lows. You get 3 different hits as well. So it's still within the channel. When you're looking for the pattern of higher highs, higher lows, lower highs, lower lows, and all that kind of sort of deal, this low was a higher low from this low. This high was a lower high. Now we have a pattern of 1 lower high, 1 lower low. We have a pattern now of our second lower high. So what this has not done is make a pattern of lower highs and lower lows, pluralizing it, because we've only had 1 lower low during the duration of this chart, and that of course was this low in here, because that 26 was lower than about 32. But this low is exactly the same size with about a 4 or 5 cent difference. So yeah, the exact same, and technically it was 5 cents higher. But this high is higher than this one in here. Therefore, when you have a situation, you're making a higher high, any successful retracement in that level on the shorter term time frame of 30 would most definitely qualify for such, to then give you movements that brings you back to this level. Then you increase the chances of taking that level out. And then from this point on, the 33.58 does match as well with the 33.41, pretty much the same, that connects this low with this high. Because if we take the high of 49.81 and we divide it by the low of, say, 26.10, put this to the power of 61.8% again, multiply the low, and that will give us that $39-ish level, 38.91. So on any moves towards the upside, that would be where I'd be looking for a level of resistance. So if it does find this low somewhere in here, makes it back, this And it's a big mark too, because then what that would tell us is the move from point A, which is this top, point B, which is this bottom, would be that of a failed move and be able to regain the bull market. Now, I'm going to make a very easy and yet bold prediction. I'm going to go back to the silver daily chart before we switch it on to gold. And that is, you're looking at these moves. Okay, so we have some unvolatile days or some normal days, going from like say 32 and change from like 31.50. So we're having like 70-cent days here, an 80-cent day there. That's normal, and that's going to be the majority. But what else is normal and the minority is that we have $2 days and $3 days, and you have major smackdowns, major smack ups. Back in September, the market moved from, we'll bring up the weekly chart again, but in 2 days we've seen the price go from 40 down to below 30. In fact, it was down to like 26. This worked in a couple-day period. That's extremely volatile. It's going to cause a lot of emotions within the market, and that's just the way it goes. We'll forget everything of what happened in the past, live in the now, and that's pretty much almost a guarantee for that to be the case. You can say the same thing with stocks. There's going to be a day where we'll have a day where the Dow Jones goes down maybe 300-400 points, and then down another 200-400 the next day, and maybe that again the next, causing a lot of fear within the market. But that'll all change in time. On the gold chart, we're looking at the daily chart, and I said last week that I would have been very surprised if this would have been the bottom, because I figured this was a massive pierce above this mark. Now the new bottom is about as large of a pierce that I would want to see, because when I look at different areas where the line is met, how far do I really have to see this go before I can say, yep, that's a pierce towards that level? And quite frankly, this is still decently above this high, but it's obviously still a little short of making it towards that mark. Still may do so, and of course that is unclear at this point. But again, you got the pattern lower lows, and you got a pattern of lower highs. So it really needs to get above even the last high of about 1710. 1715 to break this high. You can use the same calculations again for the for where we should be retracing to. This line is about 17, we'll say 90 and 1630. So we'll take 1790 divided by 1630, put this to the power of 61.8%, multiply it again by 1630, which would give us a price objective to about 17.25. Therefore, if it does rally from this point here, the area that I'd be expecting to find a level of resistance is somewhere within this band in here. Let's look at this on a more longer term time frame, which is the 9-day chart for gold, and this has taken us right exactly to the market bottom. This shows 100 periods, how I've got this set up. And 100 periods ago, gold was down to 692. Since that point, it has been pretty much nothing more than a major bull market. Now, if we draw a trend line, we can pretty much see that it's this trend line is currently hanging on by a thread as of now. You can even state, well, we're in a symmetrical triangle. This one's broke, and well, now this one's broke. The key thing about trends is when you break a trend line, sometimes what that means is that you just change the rate of ascent or descent, rather than, of course, switching the direction of the entire trend. So I really wouldn't be too concerned on a break of this trend as of yet. But at the same point, any breaks below the previous support level here at 1500 would start to give you a lot of concern that we may, for the first time since the market has begun, had a significant test of a 38.2% level, at least since we got up to here. I think from this top to this bottom, no, that's not even 38%. So yeah, this looks as if it does break below in here, that we are headed for here, which is, drum roll please, 13.7, no, it's a lower band, excuse me. Well, still same thing, 1300. This is this level, and that's almost, I'm not going to say a gimme, but it's by the book that if this gives in, that this is where we go. Now, if we're having that major washout with everything coming into play, that would be the definite most expected area. What would match gold at 1300? If people are right about silver making the big capitulation move, causing the major market disconnect with the physical market, then it will be, this would match with that big low of silver, whatever it happens to be, and there we go. Now that's on the downside, and that's breaking this level. Question is, breaking what level on the upside means that this thing is just ready to get going. And it's pretty much that range that we're in. The range is from about 1500 to roughly 1800. That's the direction of the range. Currently at 1662 means we're right in the middle of it. There's no reason to state we got a better chance to go here than we do here, unless you know something that I do not. Thank you for tuning in, and have yourself a magnificent week. Bye-bye.